In this video, I want to talk about some controversial tips, tricks, some things that I've thought about over the past few years, and some things that I found on the internet. Now, some you might not agree with, and some you really might agree with. Now, that's the point of this video. I want everybody listening to this to open up your mind, think of trading from a different angle, and see how you could use it to improve yourself for the future. I'm going to get into some trades that I've taken, and then I'm going to relate it to some important psychology tips, and it's going to tie it all in together, and I hope it's going to make a light bulb go off in your head and think of the market a little differently. Before we get into it, I'm going to post a link for my Instagram in the description below. In fact, everything that we're going to talk about in this video has been on my Instagram story. Things like this, along with very important trading recaps, tips, and tricks, get posted on my Instagram. I definitely recommend everybody watching this to follow me on here. The link will be in the description below. It's a good resource, and you're really missing out if you're not following it. But the first thing I want to talk about, and it's the title of this video, and some people might have clicked it because they want to know how trading is going to change their life. And listen, I really recommend watching my past videos, but the point of this little first tip is that I see a lot of traders, I see the market through different lenses, through traders that just got started, that have no idea about trading, to some more experienced, to some who have a little financial background that get into the market because they want to make a lot of money in a short amount of time. A lot of traders do this, and they are focusing on the wrong things. They are looking to get rich quick and nothing else. They see the guy on Instagram posting about, crazy lifestyle, which is possible. I've always said this, but this gives them the wrong approach because they compare themselves to this guy. If they follow his strategy or they buy his indicator, they're going to be a millionaire trader by tomorrow. This impersonates a false impression about getting rich quick and nothing else. In my opinion, and how I recommend everybody doing this, is focus on the technique. Focus on the process. Results will take care of themselves. Think about Kobe, MJ, LeBron. They're every day trying to perfect their craft. They're looking to get better. They're focusing on their technique. They're focusing on the process. They're not worrying about scoring a game-winning three-pointer. That's just a result that will take care of themselves if they focus on the technique and strive to improve on a daily basis. Also relate this to a monetary goal. One large trade will not change your life unless you're making millions. Now listen, if you make $1 million, $5 million on a trade, yes, that is very good money that could change your life in one single day. But what are the chances of that? Very, 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 very slim. What will change your life forever is making consistent profit day after day, month after month, year after year. This point right here is something that every single one of you watching this video, if you're not consistent, should focus on. You're not going to make money every day. You're going to have some trades you're going to lose. You're going to have some days you're going to lose. You might even have some weeks that you're going to lose as well. However, you need to focus on making a small, consistent profit by following your process. Small, consistent gains become large, consistent gains solely by increasing your trading size. Trading is the most scalable business. A lot of traders come into the market, they have a $10,000 account, $50,000 account, their full life savings, and they want to grow that. Now, what do? They trade with too large size, their emotions get influenced, and they lose a large portion of their money because they are trying to get rich with a large amount of money. The best thing you could do as a trader is consistently look to make small gains. I don't care if it's 10 bucks, I don't care if it's 50 bucks. In fact, it's more impressive to me if you can make 50 bucks, 100 bucks, 200 bucks a day versus somebody that's making 1,000 bucks today but losing 400 tomorrow, 600 the next day, and they're getting large losing trades. So unless you take one large winning trade that's going to change your life, you should really focus on becoming consistent, making small profit and small incremental mental and monetary gains on a daily basis, because these you could easily scale up and that will change your life forever. Trading is a skill that will change your life forever. If you build a system, you create an edge that you could go into the market every single day with confidence. I wake up every single day and I don't expect to win every single day. I don't expect to take large winning trades. And some days I do lose. But I go into the market with confidence because I have a system and I have an edge that has changed my life by focusing on price and volume that gives me consistent profit month after month, year after year. If you can build something and create an edge that you can do this, that is what will change your life, not getting rich quick. And this kind of ties in with the second point, and why I see many people give up before any success is the learning curve in trading is very steep, it's very broad. The market is very complex. There's nothing definitive. It's a marketplace. There's nothing uniform. There's nothing set in stone. It's complex, it's ever changing, and it's ever adapting. So you need some type of specialized knowledge that, one, is not available freely, and number two, it requires consistent screen time and experience that's going to take time. It's not something you could truly learn by reading a book or watching a course. This will give you the foundation that you do need, and I recommend everybody watching a book, looking into a course, watching videos. That will give you the knowledge that's needed. However, the second part of the knowledge, specialized knowledge that you develop via screen time and experience. Basically being in the middle of the battlefield, getting things thrown at you, and adapting and figuring out your way to win that battle. That is the screen time and experience that is needed. It's not something you're going to learn by watching the market for one day or 1 week. It takes many, many hours and many days that will continuously compound as you build the screen time and experience. And a lot of people are not willing to lose money. Again, they just saved up $1,000. They worked a job for 2 months. They have a $1,000 account. They want to grow it, and they're scared to lose it. Your fear of losing this money while you're learning and while you're building your intellect is actually setting you back. It's not propelling you forward. In my honest opinion, some might not agree with this. I truly believe you have to get knocked on your ass and you have to lose in order to win in trading. And a lot of people don't have that mindset because they aren't willing to lose in order to learn. Every loss is a lesson as long as you take something out of it. I don't look at a loss as a true loss. It might be a monetary loss, but a true loss is a true winning lesson as long as I take something out of that. Not a lot of people have this mindset. A lot of people have weak desires. Focus on the process. Focus on small, consistent gains and stop trying to make a quick buck. If you want to make a quick buck, go to the casino and gamble your money there. The market is completely different. We need to set ourselves up to have an edge that it is like a casino. However, when we're in front of the screens, our edge gives us increased odds or enhances our odds of winning and being on the right side of the market. It's never going to work if you want to gamble and make a quick buck. Go to the casino. Again, these are things that I've posted on my Instagram story. I like doing these on weekends. If you're not following me on there, at Ameritrade, the link will be in the description below. You're really missing out. Now, the next tip is a technical analysis tip. I'm going to show you a trade that I took, which was actually a losing one. And then I want to talk about how a hypothetical one that we could have taken if we were aware of this and we thought about this before taking it. So trading is about realizing the non-obvious and realizing that before it becomes obvious. Now, what that means is that if everybody is on one side of the market, then it's obvious. If everybody's looking to buy something, then the chances of the validity of it keep going up, I would say, is a little bit slimmer versus if it was less obvious. So trading is about realizing the non-obvious and realizing it before it becomes obvious. I'm a very big trader into going with the opposition's viewpoint of the market. I'm not so much into the retail day trading strategies, wedge breaks, flag patterns, indicators. You all know this if you've been following me. And that's all obvious stuff. Everybody could plot it on their charts. It's very, very easy. If somebody's grandma could do it, the chances of it working out, I would say, is very, very slim. So if it's easily accessible or everybody does it, I would say it's very obvious. And if it becomes obvious, it usually becomes crowded and usually the market will reverse from that level. So if you've been watching my recent videos, I've been stressing on the S&P 500 ES, the E-mini futures, this 3867 to about 3875 level in pretty much all my past recap videos. It was a very, very important key level that was once supply, it then turned into resistance, then turned into support. Key level in the market that every single time we've tested it, the market has reacted. In this example, we sold off from it. The following day, it acted as resistance on an intraday level 3 different times. We gapped up, and then guess what happened? The next day, it acted as resistance. The following day, it acted as resistance. And then the following day after that, we broke out above it. Now, with this in mind, this was a Thursday, December 29th, 2022, in the Discord, I was very, very cautious. We had a bullish plan that if we can break above this 3875 key level, then I would be interested in taking the market long. However, if we go to an intraday chart, this was way, way too obvious. Everybody was watching this level. In fact, everybody was looking to play the market long above it. It just looked too obvious. The market was rallying, kept going up, and it was just a crowded level that everybody was watching to take the market long above that. When I see everybody watching a specific level, I kind of avoid that setup. I might not take it, or depending on certain context, I might do the opposite and fade those people. So this was a trade that we broke above that level, and the market did absolutely nothing above that. And if you did take the market long above it, you would have gotten chopped up going into end of day, where we consolidated for about 4 hours after that. So this is the obvious. If anybody's on Twitter and you follow a bunch of guys and everybody's talking about more blood in the market, or the S&P is going to make new highs tomorrow, then the chances of that happening is slim, because it's so obvious. Everybody's watching it. It becomes crowded. Everybody buys it, and it usually reverses. When you think it's the best time to enter and you need to ask somebody else, does this look like a good setup? Or you need somebody else's opinions to tell you, this is good to go and buy it. Honestly, it's best to stay away from it. And when you don't think too much about it, it's usually a really, really good time to enter. Less thinking is the best thinking in the market. Now, I don't want anybody saying, oh, this doesn't look good, or why would I buy it here? And just because I said that, I'm going to buy it. That's not the approach I want you to take. I want you all to just let go of your thoughts. And if you think too much, fear is going to start creeping in. So when you do think about it being the best time to enter, I maybe suggest trading smaller size, maybe not even trading at all, or test it out yourself. Usually my less thinking, and I don't think about where the market could go, my fear of losing, or where I expect it to head, or what I want to see. That's what I mean about thinking less, or not thinking so much. Same exact thing. I took the market long, expecting it to break out above. I was thinking so much. I was saying, okay, I expect it to break out. I think it's going to go up. I didn't get valid confirmation, and I was thinking so much about every possible scenario, and guess what happened? It wasn't the best time to enter, and the market reversed. I know this might be a little bit of a controversial tip, because some might not agree with it, saying, Carmine, you're telling me not to think. Then if I don't think, how do I know when to enter? It's not like that. I want you just to think less and not think about every possible scenario once you have a play intact. Next point, you must understand two important things. Will other people buy after you buy, or will other people sell after you sell? If the answer is no, then you should not take the trade. The market moves up until the last buyer buys, and the market moves down until the last seller sells. The market is an auction. If you look at the stock market, or you look at the charts, like any other real auction with buyers and sellers, this will make sense. The price of any good or any market, any car, watch, stock will go up until the last buyer buys, and will go down until the last seller sells. So you want to make sure if other people are going to buy after you buy, or will others sell after you sell. If they do not, then you should not take the trade. This is what I mean about watching for momentum and watching for volume to come into the market. If we are coming down, let's just say inside of this demand zone, you first want to spot buyers inside of this demand zone. Now we know we have buyers present in the market, and then you want to enter that trade with valid confirmation that's going to put you on the right side of the market, that you know it has a possibility of other people buying after you buy, because that is going to put more fuel in the fire, and that's going to bring the market higher and give you a profitable trade. If you look to enter the market here, maybe you see some people buy, but maybe there's resistance right here and you don't expect other people to buy after that, then that might be a trade you should not take. Or if the market is coming up and there's a really large buy, let's just say at the high, and nobody else is buying after he buys. We saw this perfectly on December 28th. The market rallied into that 3867, 3875 level, and we literally moved up until the last buyer aggressively bought. There was a very, very large passive seller at 3875, and that was the high of day for December 28th. The market moves up until the last buyer buys, and the market moves down until the last seller sells. You want to make sure you're on the right side of the market. A little bit of a psychological tip. To win, you have to eliminate all self-doubt. An attribute of a winner is complete control and total lack of self-doubt. You are the only thing standing between your success and yourself. Let go of your brain, let go of your thoughts, let go of your mind. Think less and believe in yourself. I see a lot of people take a huge loss in the market, which you should never take a huge loss, but use that as a lesson. But I see people taking losing trades. They say, now fear creeps in. They're like, oh, I'm a bad trader. I shouldn't be doing this. I can't do this. I suck. I am not meant to be a trader. I got to go back to my job. You're doubting yourself. You're not believing in yourself, and you're thinking too much. Fear is creeping in. You must let go of your thoughts, believe in yourself, and eliminate your self-doubt. If I can do this, you can do this. If the next successful guy you're watching on the internet does this, you can do it as well. Anybody could do this. I'm no different than you. You're no different than me. What might be different is your knowledge, your screen time, your experience, and your strong mentality. A lot of people have, as I said earlier, weak desires and weak mentality. You have to eliminate all this, especially self-doubt and fear. Stop trying to skip the steps and get rich quick. You have to put the work in. I get tons of messages on a daily basis. Yo, man, can you help me grow my $1,000 account? Or, yo, man, I want to be a millionaire. Can you give me some tips? The amount of people that I see looking for handouts and shortcuts is unreal. And to be honest with you, getting these messages kind of validates why so many fail. They're in it for the wrong approach. They're looking for handouts. You're trying to rob yourself of the necessary process and the self-exploration that needs to get taken in order to become successful, and the self-exploration that needs to get taken in order to figure out your process and know the right road to go down. Stop robbing yourself. A lot of people just want to get placed over the hump, but really to get over the hump or get over the mountain, you have to climb it. And a lot of people are robbing themselves of that journey that needs to get taken to climb that mountain, or that necessary process of self-exploration to know which way to go. And a lot of people don't realize this. They fail, and the quicker they come into the market, the quicker they leave it. And the best part of the community that I created is the self-sufficiency aspect to it. There's no alerts, there's no signals, there's no handouts. I provide the proper tools, roadmap that's needed to develop your own system. I'm giving you the roadmap for you to figure out where to go, the right roads to go down. There might be detours on some roads, there might be speed bumps, and I'm making everybody aware of it. But this is what's needed to develop your own edge, your own system, by self-exploring your own trading. Proper education, no BS. Teaching you how to fish versus giving you the fish. One of the greatest skills you can learn that lasts a lifetime, as I said in my first point. Would you rather get taught how to fish so you could go out on your own time and have a skill that will compound you for the rest of your life? Or would you rather somebody give you a check, you collect a huge bag, let's just say at the start, and they give you the fish and you don't have a clue on how to grow that in the future or how to make it yourself? It's like collecting a check versus taking equity. I'd rather take equity all day long versus taking a quick check. And a lot of people want a quick check versus equity, and they fail. Be in it for the long run. The quicker you come into the market, the quicker you're going to leave it. So I'm going to end the video on that note. I know some points might have been controversial. You might not agree with it. Let me know in the comments what your favorite point is, and maybe we could have some discussion in the comments. I would appreciate a thumbs up on this video. Definitely subscribe to the channel and check out the links in the description below. But I'm ending it. Peace out.